The number one priority is my family and the family business. Investing is supposed to be a side hobby. It's not meant to be a distraction. So I had to figure out, well, I like real estate, but I don't want to get this many phone calls about evicting a tenant, approving the air conditioner, needing to be replaced. So I looked around and I found out, hey, there's this thing called syndications. And that's how you enter down the rabbit hole of syndication. So flash forward, I'm invested in numerous syndications, quite a few. And it dawned on me that, if you really want to do it well, again, passive is kind of a misnomer with me. You're going to want to really get to know the deals, how to analyze the deals, and having access to the best people, obviously that's an advantage.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest, he's a passive investor in 3,400 units across small investments to office, to farmland, to ATM syndications. And he's been investing in the stock market for like 40 years. It's a long time. He's been investing a long time, but his name is Andrew Rosenberg. He's a passive investor. He works full-time for his family business, Ralph Rosenberg Court Reporters. He first became hooked on investments after buying his first stock at age 13. You're going to hear a few segments with him. We're going to talk about his background in stock market and getting into real estate and single family and then wanting to stay passive and going into the syndication type deals over a couple different segments here. I know you're going to learn a lot from him today and in the next couple of days after as well. Andrew, welcome to the show. Honored to have you on. I'm looking forward to getting into more about passive investing too. I know many of our listeners are passive investors like yourself. And so looking forward to hearing more about your experience and us all learning from them at the same time. But welcome.
Well, I really appreciate it, Whitney. Thank you so much for having me on, and would just love to answer anything you've got. Been looking forward to this all week. So thank you.
Yeah. Andrew, give the listeners and myself a little more color or description and background about yourself and your focus right now in this real estate syndication game that we play.
Oh, okay. Yeah, I'll just start first with the why, and then I work backwards to their history, or what I often refer to as the trajectory. For me, I'm 47, married with a son. And, for me, I'm at a stage in my life where I need to downsize a little bit of aggravation factor. So single family homes, they're great investments. I'm never going to say they're not, but they're not passive. So there's degrees of passive, but they're not passive by any means, especially if you want to have good returns. So for me, being more passive and going into syndications was a good route. And then I just frankly, of the asset classes, of the community of people in asset classes, by far, I enjoy commercial real estate the most. And people ask me why, and I explain to them, it's going to sound simple, but it's much deeper than it sounds, which I'll let people understand it for themselves. But it's the only asset class I see that's truly collaborative by nature in practice. So what I mean by that is it's not a zero-sum game. Operators help other operators. I go to Zoom meetups, everybody's supportive. Compared to other asset classes, when I've hung out with people, you're not dealing with whose physical equipment is the biggest, let's just say. The egos are much better managed. And you'll notice that the most successful people are the best people. And in other asset classes, I find it not necessarily the inverse, but not as highly correlated to rewarding goodness. So I'd much rather be involved in that space with my time and my emotions and my psyche than the other asset class spaces. Now, that's not to say that I don't invest in other asset classes. Where I'm going to really want to spend my time is going to be what makes me happy. I'm 47. I don't look that old. I'm a little bit gray here, but someone asks me, how long have you been investing? And when I say 34 years, they look at me kind of like, what? And I have to remind them, I bought my first stock when I was 13. I was already learning about investments well before 13. Both my grandfathers, my best friend's grandfathers, my father, that's what they like to talk about. Frankly, we didn't talk about sports. I didn't get the bedtime story about Hansel and Gretel. I got stories of the Hunt brothers trying to corner the silver market. It's kind of a recurring joke I tell, but it's actually serious. Learning about, my father telling me, it's not much fun getting a margin call at 3 a.m. because, silver's down. just things you learn way before schooling or way before you would ever read about in a magazine. I'd already kind of heard about. So I bought my first stock and it was fun. And it started off, a good thing. And, mutual funds, equities, they're good. I've lost money, I've made money. That was all fun. But you get a bunch of stock pickers in a room and everybody's got the biggest ego and whose stock went up the most or whose Sharpe ratio is the best. And I never really enjoyed it. The crypto bros, I could tell you somebody I have a 500% return and well, they've got a 600% return, and they don't really help each other. It's just more about bragging and who's right. The gold bugs. I love gold. I love the history of gold. In college, I was a history minor. I love reading about history and everything. Gold's nice and all, but it doesn't make me money. So it's a very small portion of a portfolio. I'm not dogging gold. I'm just the idea of being a gold stacker and having somebody rob my house or pay a gold vault fees doesn't really do it for me. Don't get me wrong. I'm simplifying the argument. Gold has its benefits. Doesn't pay dividends, doesn't pay distributions, not particularly tax friendly. Obviously, I hate paper assets of gold. And then we won't go into it too far because I know this isn't a gold show, but even in the vaulting world, there's been a lot of drama. Is it allocated? Is it segregated? Does the bank actually have your gold? Anybody wants to go down that rabbit hole, there's just Google it, or you can always hit me up or just go on LinkedIn. Frankly, there's tons of people that would talk your ear off. So for me, real estate, it's pretty obvious. It's the most tax favored asset and it's not even close. There isn't even a number 2 or 3 in my mind. It's easy to understand. It's relatively stupid proof. It generally tends to go up. It pays rent is a nice thing. You see it in your bank account. So for me, it was, okay, let's do real estate. So we bought too many single family homes and it got unwieldy. So it got to the point where I had to decide, do we continue down this route? And it would create a need to expand to justify making a company out of it, bringing on a virtual assistant, bringing off a staff. And it didn't work for me. And some people say that's nuts. That would make sense. It would make more money. You like the asset class. And I said, no, the point of the money, the why, was to remain passive, to be a good husband, to be a good father, husband and father. And, my family we have a family business and it's quite time demanding and it's quite stressful. And that's where my focus, of course, has to be. The number one priority is my family and the family business. Investing is supposed to be a side hobby. It's not meant to be a distraction. So I had to figure out, well, I like real estate, but I don't want to get this many phone calls about evicting a tenant, approving the air conditioner, needing to be replaced. So I looked around and I found out, hey, there's this thing called syndications. And that's how you enter down the rabbit hole of syndications. So flash forward, I'm invested in numerous syndications, quite a few. And it dawned on me that, if you really want to do it well, again, passive is kind of a misnomer with me. You're going to want to really get to know the deals, how to analyze the deals, and having access to the best people. Obviously that's an advantage. It's not like a mutual fund where you just can open up a newspaper or Google it and you'll find who's the best mutual fund managers. It's a little different in commercial real estate. For viewers that don't know, the SEC, they mean well, but I think they cause more trouble than they help. 506B, 506C, we won't go into too long. I see you're nodding your head. I see your eyes getting it. The best syndicators, in some instances, you have to be accredited. Not everybody advertises. So some of the best deals are 506B, which means you have to have an existing meaningful relationship. So how do you meet these people if you don't know them and they can't advertise? So the only way to do that is to network, network, and network. And in the process of networking, you find out how little you know. And it turns out it's a lot of fun. So I go to consistently 3 to 4 Zoom networks a week. We have our own. And that's been the best source of both knowledge and increasing good deal flow. The point isn't to increase deal flow where I'm reviewing a new investment every day. I don't want to be doing that. I want to review good deals. And when you find your handful of syndicators that you like, know, and trust, you just want to have enough deal flow that, God forbid, I sell a house tomorrow. I don't want to be sitting on the cash forever. You want to have access to a good deal. I know I'm being a little bit overboard with emphasizing good deal, but yeah, there's no shortage of deals out there once you're in the know. That now the new problem has become, you went from not enough deal flow to how am I going to vet it all? And then you realize it's not all good. I'm not saying there's a lot of junk out there necessarily, but I'll just be polite and say there's a lot of average, and average right now definitely isn't good. 2 years ago, average was fine. Average was rents were just going to skyrocket. And whether or not you were almost a good operator, you were going to make good money. Warren Buffett has that famous expression that everyone loves. And I apologize to everyone who's going to roll their eyes. They've heard it before, but you only know who's swimming naked until the tide rolls out, right? And I think I might have inverted it when I paraphrased it. We get the idea that everybody's, like it's the same thing with the stock market or any market. You could be a Bitcoin fund manager, and 2 years ago, you looked like a genius, and now you look like an idiot. Did your skill really improve or decrease depending on the time period, or was it the time period? It's the same with if you had a tech fund and you were an equities manager. Were you really a good manager? Cough, cough, Kathy Woods, right? Everybody looks like a genius in a bull market. Now, I don't know what she's down, and I'm not just picking on her too much, but now she's down a ton. Is she a terrible fund manager now? I don't know. It's hard to tell really what she did. All she really did was ride a trend. We'll see. That's one thing I would advise people about real estate is if you're with the best of the best teams, they're going to make money. I've always found it weird that people get so enamored with these news headlines.
It directs everything. It seems everybody does, right? How you feel every day is dependent upon the news headlines.
Yeah, and I'm going to say something that's inappropriate, but that's my personality. So just bear with me. And anybody watching, I just apologize, but it's how I feel. Why am I going to read a 25-year-old's article about the economy or about investing who's living in her mom's basement? And granted, she graduated from an Ivy League college, or he graduated from Ivy League college, they graduated from an Ivy League college, to be politically correct. And they've never owned real estate, don't have any investments. Why do I care about their opinion? I just have zero interest. The mainstream media is just amusement for me. I call it fintainment. It's just garbage, frankly. To say a market's going down, okay, that's lovely. That meant bargains are harder to find. That doesn't mean bargains doesn't exist.
Right.
That kind of an absolutum or bipolar world is a sign of ignorance, stupidity, or psychological disorder upon a person. The best operators are not the same as the newer operators. Who gets the call from the broker for an off-market deal when it's a good deal? The person who's closed before, the person with more funds, the person with a track record. We all know lending is not created equal. You and I go into a loan, and Joe Fairless goes in for the same loan. Joe gets the loan before us. That's how life works. Life isn't fair. Never was meant to be.
I'm good friends with Joe, so I may call him and say, hey, no, I'm just kidding.
Yeah, Joe, stop hogging all the lending money. Okay.
Yeah.
You know where I'm going with that. It's like Warren Buffett and I walk into a bank.
Right.
We're not getting the same terms. We're not getting the same rates. Obviously, I'm probably going to be dealing with underlings. 3 months later, I'm meeting with the loan officer. He's already at lunch with the loan officer. That's just called life.
One of the ways that we scaled quickly was attending many conferences early on and networking and learning as fast as possible. There's a conference coming up that you need to know about. It's called the Think Multifamily Annual Fire Summit Conference, and it's November 11th and 12th. You can save $100 on this conference by using promo code Whitney100. And if you're tired of paying too much in taxes or want to recession-proof your investment portfolio, you need to consider Think Multifamily's Annual Fire Summit, November 11th and 12th. The Think Multifamily team has over 25 years of experience, done over 100 apartment syndications, 16,000 units purchased in 13 states, and over $1 billion in assets under management. They have the experience that you can trust to help you grow your personal portfolio and avoid those pitfalls that often investors and syndicators fall into. They know you don't have to sacrifice integrity and transparency and servant leadership or your family values, and you're going to feel those things at this event when you attend. Don't forget, thinkmultifamily.com/fire and use promo code Whitney100 to save $100. Yeah. And it didn't start there for him either, right? It even goes back, I think, even back to the networking piece you talked about, a number of minutes ago, and you got to get started somewhere. You got to start networking. And I can relate directly to what you were talking about, the commercial real estate piece versus single family. When you were talking about that, it made me think about when I first started trying to learn about real estate. I started going to all the meetups, right? And that was, there was one here locally I would go to. Every week I was meeting people and everybody in there was in the single family space. And it was so cutthroat. There were literally fights within the meeting at times. People were so at each other, where they're going after a lot of the same deals, and, they see each other on the same auction steps. And it is just, I was like, wow, is this really what I want to be a part of? But the commercial real estate industry, as we grew and as we moved that direction, thank the Lord, it's not that way at all. It's, our best deals have been because of partnerships, right? Or we've moved quickly and grew fast, by collaborating and finding talent and, partnering and bringing people together that have made an amazing team versus the team of one, which wouldn't have gone very far, So
I love that you just said that.
Yeah.
Just recently I had somebody repeat a maxim that I really loved was, if you want to go somewhere fast, go alone. If you want to go far, go with your friends. It's very true. And the deeper you dive into commercial real estate, you start realizing, and it's not just about money. A lot of people, they grasp on, and I get it, and it's good. It's a good start. They grasp onto that first piece that, Whitney wants to buy a $20 million building. And of course, Whitney doesn't have $20 million. Now, granted, we're going to borrow money, but Whitney doesn't have, let's just say, $2 million, even if you got a 80% loan to value loan, right? Whitney doesn't want to invest all $2 million of his dollars in that building. He'd like to get some people on board. They grasp that part of it intuitively. As you know, and I'm going to preach to the choir here a little with you, but maybe for your viewers, it goes way beyond that, of course, right? A good commercial real estate team goes way beyond one person because of skills. I've not met anybody. There's people that are very talented, sure, but most people are somewhat a specialist. Somewhat. I'm not going to oversimplify it. They know, the best people know everything, but you're going to have one person who's really good at underwriting. You got to have a person who's really good at sourcing the deals with the brokers or other operators. Oftentimes, you're going to have one person who's really good with just dealing with the bank. And then you have investor relations and capital raising. We're really oversimplifying things. And I'm not to imply that underwriters can't raise capital or the capital raisers don't understand underwriting. I'm not trying to imply that. But the idea that one person could wear all those hats and wear all those hats effectively borders on absurd. So when you see a deal with one person or two people, I get nervous, obviously. And then when you see a deal where everybody is a capital raiser, where everybody is an underwriter, I get scared. And I hate to use the word holistic because it's such a cheesy buzzword of the day, but it's true within commercial real estate. If you don't have a team of people to answer all the facets, you're exposing yourself now as the LP investor to risk. A good example is I was reviewing a deal that I liked on paper, some things. There was one thing I didn't really like, and I sent it over to a friend. And I said, can you just do me a favor and look over the underwriting more? And then the fact that I didn't know the syndicators that well, I was asking him if he could vouch for them. He didn't know them, but he said he'd do me a favor and take a quick look. And he came back and he said, I didn't even get to the underwriting. And I said, okay, what's that? I was curious. And he said, well, at the entire presentation, they had one slide about property management. And it was a generic slide you could create in 30 seconds. It looks like they just cut and pasted it from the property manager's website. He said he fast forwarded, watched part of the webinar and just never found any meaningful discussion. And he's like, look, there's just so many deals out there. I would never even consider this one. And I said, oh, why is that? Tongue in cheek a little bit. But he said, why is that? And he says, well, he said the same thing I'm going to say is, what's one of the highest probabilities for a deal to fail? Property management. So if these guys don't view property management important enough to present or haven't taken much time in it, there's just too many deals. Like, I don't have any more time to waste. So I'm not even going to look at the rest of the deal. He's annoyed at that point with me for sending him the deal. Now, he understood I was in educational purposes to help me. Yeah, it was one of those deals where he wouldn't even have looked at it. And I'm thinking to myself, wow, I just spent a lot of time looking at this deal. I had that reservation, but I still proceeded. So it was a learning moment, for me. And that was really the whole purpose of the exercise. So, like there's deals you look at where they're very quantitatively strong. You have a CPA and let's just say another person with a numbers background, and it's great. They got all their numbers down and they got spreadsheets and their underwriting is really, really solid. And that's important. Don't get me wrong. That's great. But how are they going to execute the business plan? We're running a business. We're not running a spreadsheet. It drives me nuts that people view real estate as it's just math. No, it's not just math. It's simple math. It's important math, but it's not just math. If anybody was going to tell me it's just math, I'm okay, that's great. You can be on my podcast, but I'm not investing with you.
Every deal is its own business in my eyes. I mean, every project.
Particularly if you're going to do value add.
Right.
I'm a remote investor. I own a house, let's just say, for instance, in North Carolina. I have a remote property manager. Why should I co-invest with you on an infinitely more complicated building, vastly bigger than my little house? If we're just doing remote landlord, if we're just going to be absentee landlord, I'm just going to delegate away willy-nilly responsibility to a property manager. I can do that myself. I don't need you for that. You're not bringing any value to me. I don't want to do it. I guess I could do it. I know a lot of my friends do it. I could do a renovation on my existing property or a property I'm going to buy, and I could do it remotely. It doesn't sound really fun, and I don't have a lot of connections. I could get burned really easy. That sounds like what you're doing, just on a bigger scale, if that's that person. So I think that's a nuance that people are missing. It's the opposite too. You'll have people that are great in all the soft skills, can't run numbers. That's the inverse, it's just as dangerous. So as the LP, you really got to look at the team, and everybody says the team. And then you watch a webinar, watch a presentation, and 2 pages on the team. And then bam, we go into gratuitous amounts of how hot the market is. There's a Starbucks down the street. God forbid some drone video footage.
Go to the flashy stuff. Right?
Yeah, a bunch of IRRs that frankly I don't care about, because let me caveat that. I care about the IRR, but I'm not even listening. Like my blinders are on. It's not even a starting point. If you don't match the first steps of the deal, I'm not going to make it through that part of the webinar. I'm already clicking off now because I don't want to hear it. It's meaningless. They're projections. And projections have no merit if I don't believe in a team. I don't want to hear rent comps anymore. Like I'm out. That I think one of the things as an LP you start learning is you really need to increase your deal flow so that you have the ability to just quickly say, no, that's not for me. And that's not to say the deal might not make money, but this is a long-term relationship. I mean, this is going to be the boyfriend or girlfriend from hell for you if it goes south.
3 to 5, 6, 8 years.
Yeah, you're like, think about it, 3 to 7 years. And if you got to call up the syndicator and be like, hey, what's going on with the deal? You said you were going to give out monthly updates or quarterly updates. Where's the update? Or you get the update and you're like, man, there's grammatical errors in here. It's very vague. Can I get some accounting statements? Do you really want to deal with that? You get a capital call, which no one talks about, like as if it can't happen. Trust me, it can happen. I've had one. How it's communicated is definitely going to be the foundation of, is that relationship going to work in the future? Everybody's nice when you're wiring 50 grand, right?
That's right.
You find out who your friends really are when it's, hey, Andy, we need 6 grand because those are, what was that? Oh, you're not going to pro forma. Why is that? Oh, you're having a problem with property management. Wait, you told me, don't worry, we're just going to delegate it. Or, the due diligence, don't worry. The broker said we could bump up rents $200. Well, we're able to bump it up $20. The market's a little tighter than we thought. No, you didn't think. You trusted a broker. That's kind of a side issue that we'll get into.
And I know in a moment we're going to jump more into vetting the team and some questions that you like to ask, and I want to do that. And before we jump into that segment though, explain a little bit more about your path into syndication, though. I know you did single family stuff and not really why syndication. You've talked about that, but like maybe how you educated yourself, or I know you talked about networking, but you came from really the stock market for many years, sounded like, into the real estate business. But syndication was kind of its own animal. I guess, how did you educate yourself to be confident for your first large investment in a syndication?
Yeah, I often talk about it. It kind of flows in stages for most people. And oftentimes people get hung up or stuck in stage one. I often refer to stage one as consuming. And the lowest form of consuming would be excessively watching YouTube. There's lots of good content on YouTube. I'm not saying I watch YouTube. Most everybody I know watches podcasts or interviews, and there's lots of great educational content on YouTube. What I mean by is excessive. If that's all you're doing, or you're doing too much of it, at some point, it's time to poop or get off the pot. I meet people and I'm like, yeah, I met you 6 months ago at a network meeting, and you said you're looking into investing in real estate, and they're still looking. It's been 6 months. It's time to poop or get off the pot. And I get it. It's a lot, it's a one-time big chunk of money, and no one wants to be the guy that bought at the peak of the market and then 2 days later it crashed. But here's the thing. Were you really worried about your 50 grand? Were you really worried about it going down to 40 or maybe not getting your distribution? Or were you really worried about your ego, your pride? And no offense, people are going to think I'm a jerk, but I'm going to tell you the truth. As far as my truth is that for most people, you're talking your pride. That's your biggest bank account. No offense, that's your biggest debit card. That's your emotional credit card. That's what people are spending. You need to get over yourself. People lose money. Not every investment does well. That's not to say just go willy-nilly into it and be unprepared or do stupid things. But paralysis by analysis is a real thing. The sideline is for suckers. If you want to wait around for the trough and you're going to sell at the peak, first off, you're kidding yourself. You don't have the psychological strength to do it because you haven't been doing it. You don't have time in the game. You haven't had skin in the game. Go keep watching all the YouTube videos, hang out with your latte sipping friends and talk about it at a party, stoke your ego, but you're full of it. You ain't doing it. The real people are out there. They're tranching in with money. They're out there looking, good market, bad market. They're looking for deals. They're examining deals and they're networking. So that gets you to phase two. You start meeting people. It's a higher level. It's not just consuming. That's when you start asking questions. And again, your ego has to be on the line. You have to not be the smartest guy in the room. You have to be able to look like an idiot, ask a question. What's a cap rate? The only thing that's truly foolish in life is willful ignorance. If you choose to be ignorant, that's on you. There's lots to learn in life. Everybody I know, you said Joe Fairless. He's more interested in learning and more invested in learning, spends more time in learning than the average newbie. So explain that to me, right? There's so much to learn. So if you don't have your ego in control, your pride in control, you're not going to be successful at this. Let's just be honest with you.
I spend a lot of money learning from others, no doubt about it. And one big benefit of even having a podcast is getting to talk to so many people and ask so many questions. That is a major benefit. I saw this little analogy or I don't know who posted it on LinkedIn yesterday or this morning one. And it had this, we've all seen these things of stair steps, everybody talks about taking steps, and it said, it's scary to take the first step. However, then it showed 2 staircases and it showed a guy standing at the bottom, here. And then it said a year later, the scariest thing is, guess what? Him still standing at the same step because he didn't take it, that's scarier than taking the first step, right? Is thinking a year from now that I didn't take a step. I didn't do anything. And so I thought that was a lot about what you're saying there. So Andrew, we're going to jump in a moment or in the next segment on questions you like to ask and vetting operators and that team, going more into that. But before we do, for today, tell the listeners how they can get in touch with you and learn more about you.
Oh, okay. The only social media I'm on is LinkedIn. I spend quite a bit of time on LinkedIn interacting with people and posting. That's the only place. My mini podcast, the CRE Spotlight, is on. It's a little 5-minute clips of captioned audio, and it's good stuff. The only people that are allowed on are people that I know, like, and trust. So you can't buy your way onto the show. We have a no douchebag policy. I'm not allowing anybody on that's a jerk. So you can offer me, not that anyone would, but you can offer me $1 million. And if you're a syndicator I don't like, and I could name a few, but we're not allowed to on air, you're not coming on. It's just not happening. The one asset that I value above all asset classes is my reputation. That's my wife's reputation. That's my son's reputation. That's my father's. And it sounds silly, they're long gone, but that's my grandparents. That's my mom who's passed away. That's one asset class I'm not willing to tarnish. It's not for sale. So that would be one of the things I would say is, if you want to talk to somebody who's got no agenda, I'm your guy. I don't have a mentorship. I don't have a sales group, not publishing a book. I'm probably the world's worst monetizer. But it's also been very beneficial to me because a lot of people do come and talk to me, and it's formed really good relationships. And when I ask some of the people, why are you talking to a little fish like me? They'll often say, well, the one nice thing about you is there's no agenda.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.